Hey everyone, let's take a pop quiz today. There's a company, let's just call it company ABC. It went IPO on July 1st, 2020. Its stock price was $70 on the day of IPO, and it had gone all the way up to $170 by end of the calendar year. That would be year one. That's when you got in due to fear of missing out. At the same time, the share price started tanking, and by end of year two, its share price declined by 75%. Another year in, it further dropped to 60%. But luckily, it's gained 195% in the following year. So the question, what is your rate of return? Hey everyone, welcome to my channel and thank you. Okay, let's come back to the problem. Let's first look at your average rate of return from the point of time you invested in the stock. Your average rate of return is, so it's 20%. Yes, 20%. Stock price at the end of year four, that'll be December 31st, 2023. That'll be $50.15. Yes. Your actual rate of return for the 3-year period, that would be year 2 through year 4, is a negative 70.5%. Oh my God. Even if you were investing from the point when the company went IPO, you would still have a negative return by end of year 4. So this example has reflected the fact that a lot of companies were outrageously overvalued in 2020 as a result of both fiscal and monetary policy responses by Congress and the central bank respectively, but only to see their valuations to come back down to earth in 2022, such as this one, Lemonade Inc. The point here is the average rate of return is a manipulative phrase used by fund managers or financial advisors, and it's a total smokescreen. So people won't realize they are not making as much as they think they are. What matters is the actual rate of return and your actual dollar return, because that's real money. The more and greater negative returns you have throughout years, the greater the discrepancies between your average and actual rate of return. Then let's take a look at the greatest investor Warren Buffett's performance over the years. The Oracle of Omaha, since taking the reins of 1965, has overseen a 20% average return on his company, Berkshire Hathaway's Class A shares. For those who are curious, this works out to an amazing aggregate return of more than 3.6 million% through the end of 2021. Warren Buffett has many famous quotes. Remember, one of them is, rule number 1, never lose money. Rule number 2, never forget rule number 1. There's a reason for his statement that you can see from the earlier example. The rate of return is not the only thing you are being misled by fund managers and financial advisors.
I'll talk more about it in the future.
Thank you so much for watching the video. If you think the content is helpful, give it a thumbs up. Feel free to comment down below and subscribe. And thank you. Every week, I'll upload content of investing, taxes, and personal finance topics. Please consider subscribing my channel and turning on the notification bell if you're interested in these topics. I'll see you next week. Bye!